Well, good evening, everybody, and welcome to this month's AHDB Cereals and Oilseeds webinar. The subject tonight is grain marketing, and we're continuing our international flavour, bringing in speakers and topics from around the world, and tonight's Australia. First of all, just to make a few introductions, my name is Philip Dolbear. I'm AHDB's Knowledge Exchange Manager based down in the southwest of England. And we've got 4 speakers with us tonight. We're going to kick off with Anthony Speight, and actually I'll introduce them all as we go along, and that will save time because we've got a lot to get through, and I'm hoping to get plenty of questions at the end. Just a few bits of housekeeping to go through. We are recording this, so you will be able to come back and listen to it afterwards. And on that point, actually, when I think about it, last month we had a hiccup with our speaker, Roman from Ukraine. You'll be pleased to hear that we did get a recording afterwards, and we've got his presentation and all the questions that were put to him recorded, answered and recorded. So that will be coming out with the recording of last month's webinar, so nothing's been missed there. You're all on mute, so we can't hear you. But we would like you to pose questions as you go along. And as I say, we'll save those to the end. There's a question box you'll have there in your panel on the right in grey, as I'm looking at mine. We're scheduled to finish anywhere between 8 and 8:30, depending how it goes. But I will pull the plug at 8:30 because we'll have had a jolly good session by then. Most of you, as you've gone through, will have probably registered for basis and Rosa points at the point of logging into the registering for the webinar. But if you haven't done it yet and you'd like to do it, just pop in your details in the chat function, and we can sort that out for you. And for those Twitter savvy people, please do share the handle there and spread the word of what we're getting up to. So as I say, yes, we're on marketing tonight and attitudes to marketing, and our first speaker is Anthony Speight. Anthony is HDB's a senior Arable market analyst in the market intelligence team, and he's going to kick us off with a bit more of a sort of global world perspective of marketing. We'll then move on to Pam Wesley, who's works with Cefetra grain. She's a grain buyer, and we'll sort of home in and look at the UK perspective as she's seeing it from her perspective as a grain buyer. We'll then go out into the field, so to speak, and a long way away. And Bruce, we're really glad you've joined us. It's about 5 o'clock in the morning Aussie time, but really appreciative you joining us. Bruce is a farmer in New South Wales, and he'll explain a little bit about his operation. And then lastly, we'll come back home to Dorset. We're pleased that Bob Rowe's joined us, farmer on the chalk near Blandford in Dorset, and then he'll share his farming and marketing experiences. And as I say, we'll finish up with a good question time at the end, hopefully. But if there are sort of pertinent questions to each speaker, I will just sort of butt in and perhaps ask those. So without further ado, we'll crack on, as I say, because there's plenty to get through. And Anthony, over to you. Thanks, Anthony.
Thank you, Philip. Good evening, everyone. Thanks for joining us. As Philip introduced, my name is Anthony. I'm a market analyst at the AHDB. And in this presentation, I'm just going to be discussing what's been driving grain prices. So if you have the next slide, please. So what we'll be talking about. So to start with, I want to talk about the huge global gain we have seen on grain markets and what has been happening to global prices. I then will go on to discuss what this has done to our domestic UK prices and how this global picture has fed into prices. I then want to go on to talk about global stocks to use and discussing the ongoing tightness that we have got globally for this marketing year. And obviously every presentation at the moment is not without mentioning what's happening between Russia and Ukraine. I don't want to sound like a broken record, but it is something that is driving grain prices, which I'll further discuss. And then towards the end, key watch points for the rest of this marketing year and what could happen, because we are not done yet and there's still a lot to play out for the global supply and demand. So go to the next slide, please. So we've had huge gains for global grains. The last year has had nothing but support and volatility for global grain prices. On this graph here, as you can see, we've got Chicago maize, Paris milling wheat, and Chicago wheat futures nearby in pound sterling. And even before the Ukraine-Russian war, we had a tight supply and demand for the 21-22 marketing year. Prices were historically high and above the 5-year averages. And what actually did that was August 21. I vividly remember the USDA report taking nearly 10 million tons off last year's Russian crop, which took feed wheat over UK feed wheat over £200 a ton, and it seems to have stayed there. And as we've gone on throughout the year, and I don't need to point out where Russia and Ukraine crisis happened, we see prices have suddenly spiked for wheat as 30% of global wheat exports were potentially compromised. We've seen elevated prices and volatility and then slowly come back down, but stay supported based on 5-year averages. So we have the next slide, please. So this volatility and support has fed into our domestic prices, with the news out around the Black Sea being at the epicenter of this volatility. So prices peaked in June as Russian aggression intensified. They have since come down but remained high. So the brokered deal between the UN, Ukraine, Turkey on allowing commodities out of the Black Sea is what took a bit of steam out of the market, but they've remained here, as you can see on the right, they've remained historically high based on moving averages. The deal is only for 120 days, so I believe to the start of November. There's still a lot of unknown to whether this will continue, and we're seeing some support off what's happened recently with Russia annexing parts of Ukrainian regions with referendums. This graph might be a little bit out of date. I did snip it the other day with the prices at the time, but they've only settled up on today's close a couple of pounds or 50p in some cases. Have the next slide, please. So on to now going to discuss global grain stocks to use ratio. So this is ending stocks divided by domestic consumption globally. I like to use this because it's almost like a macro, a barometer of global tightness, and it's easy to look at, and you can see that, well, just before we start, I've actually removed China from these figures because of their overinflated strategic reserves, notably of maize and wheat, which skews the stocks to use ratios because these stocks aren't actually available to the global market as China's stockpiles. But as we can see here, stocks to use for wheat and maize are going to come down for this marketing year. They're going to slightly recover for barley, but if you look on the years going back, we are in a tight situation based on historical figures. And actually, a little parentheses, the USDA released the small grain summary on Friday, which actually took over 3.5 million ton off the US wheat crop. So we can probably see that wheat stocks to use ratio further tighten as we get the October WASDE report. So we've got the next slide, please. So outlook for Ukraine, it's been a real sentiment setter for the 22-23 marketing year. As you've got lower production of grains, we've got lower export. We've got commodities moving out of the region now, as I mentioned before, and actually as of yesterday, 280 voyages have set sail from Ukrainian ports, carrying 6.1 million metric tons of grain and foodstuffs, but prices are still remain historically high off the unknown of what could happen with that deal. And actually a nice piece of information for you, the first ship since the war has left Ukraine bound for the UK with actually 40,000 tons of OSR yesterday, which is actually called, the vessel's called Pretty Lady, which is bound for the UK hopefully in the coming weeks. If we could have the next slide, please. So I talked a lot about Ukraine, Russia, and how this has been driving grain prices, and that's going to be underpinning markets. And what happens with the export corridor and Putin's comments and annexing regions is going to keep that elevated volatility. But there are other factors that have been supporting domestic prices. So drought has been a factor which has affected the US maize crop. So their area was actually down on the year. We're coming out of the US weather market, but at the time when this maize was grown, there were poor crop conditions on the year. Hot and dry weather came at a time when the US maize was silking. Production is down around 8% on the year, and actually in the latest Wesley report, the USDA trimmed 10 million tons of the US production of maize, which is actually quite a significant amount. Same in the EU. Obviously, we had a lovely hot summer here. In the EU, it was just intense, which really impacted their maize crop as well at a time when this was silking. So EU production of maize is down around 17% on the year. There have been cuts across the EU Commission strategy grain to confirm this reduction in maize. And actually for EU grain, there's a tight balance. They've actually stepped up to the mark to export a lot of their wheat for this marketing year to fulfill Ukrainian deficit, and there's a strong demand for EU grain, which inherently will mean elevated continental prices, which will feed into our domestic prices depending if we're trading at import or export parity. Russia actually have a bumper crop. There is some disparities in what size that is between Russian consultancies and the USDA. Russian consultancies are putting it over 100 million tons, USDA 91 million tons at the minute. Both are a record, but there are questions over how much they are actually going to export. Exports are lagging from a strong ruble, logistic problems committing to ships out of the region as well, and also the disparities in export data on how much grain is actually going to leave Russia. If we could have the next slide, please. And before we just go to conclusions, Northern Hemisphere supply to some extent, apart from spring cropping harvest, is done with now. And we're now going to be starting to, what will change things is demand and what happens in the Southern Hemisphere as well. So we're actually, the Southern Hemisphere, so notably the South Pacific, is in their third successive La Nina, which is a weather event that brings dry weather to notably Argentina and parts of Brazil, and precipitation and wet to Australia. And this is just something that could really drive our domestic grain prices going into the second half of this new year, especially if what happened not last year but the year before to the second maize crop in Brazil, so their Safrinha off-season crop. So this is just a key watch point that can really change things, and we are actually seeing that there is a lot of dry weather and drought in Argentina at the moment, which could change things going forward. We have the next slide, please. So just to conclude, we've got a tight global S&D. Ukraine's big watch point for their exports and the grain corridor. Big Russian crop, questions over how much is going to leave. Domestically, we've got high production. Hopefully, Pam in a moment is going to discuss more on that. And we've got higher opening stocks domestically for going into this marketing year. Maize, we're globally tight. Ukraine obviously being a huge supply to the global market, and the US production impacted by drought, but their harvest is currently in focus. And maize is so important because it's a floor to grain markets. And as for barley, we've got a tight global supply and demand and a tight UK S&D as well. So that's everything as far as I want to talk about. If there are any questions at the moment, or we going to leave them to the end, but thank you very much for listening.
There's one quick question there, Anthony. It's all about demand. How much do you see the UK feed usage decline year on year?
Oh, what a great question.
Do you want to think about it and come back to
well, we have got our early balance sheet coming out soon, which will give figure to that. But we are going to see animal feed demand reduce going into this marketing year, especially with squeezed livestock margins, and obviously what happened to the people leaving the pig sector going into this marketing year. But to actual figures, I don't think I'll put a percentage on it on how much it's going to reduce, but I do definitely think from the margins we're seeing, we're going to see it reduce.
And will that be enough to keep the market crisp, shall we say?
Well, almost like balanced, or
will other factors have an impact on price rather than reducing UK demand?
Yeah. I mean, I like to say, we're price takers, not price makers. There's global things that can happen, and also we might have reduced demand for animal feed, but at the moment we've got we're we're set to have both bioethanol plants running into this marketing year, so you could definitely see premiums stretch further into the north and around the Yorkshire region at the moment. That's providing both ethanol plants are up and running at full cylinders.
Okay. That sounds like a good intro point for Pam. Thanks, Anthony. That's great.
Thank you.
We'll come back to your thoughts in a minute. So Pam and I worked for a long time together locally here in Dorset, but Pam now works with Cefetra and covering quite a large area. So, and as it says, there is a grain buyer with them. Pam, thank you for joining us, and we look forward to sharing your thoughts and how you're seeing it from the perspective of the grain buyer on the ground in this country.
Perfect. If you go on to the next slide, please. I'm just going to run through a little bit of an introduction to Cefetra in case anyone's not heard of us and what we do. Then I'm going to talk about the grain markets, how we got to the situation we're in at the moment, how it's a perfect storm and what's actually happened, what's going on with the grain markets today, and how we as a company see the future. Next slide, please. So Cefetra has over 170 employees. We have 9 different sites of offices. We operate from 42 different ports and 39 storage facilities, and we supply over 50 different commodities. We are neither a producer nor a manufacturer. We're completely independent and customer focused. We move 775 more trucks per day of different commodities. Next slide, please. This just shows where our offices is. We've got offices in Scotland, Yorkshire, East Anglia, up in the east, Kent, south and southwest, the west and the northwest, and it just gives you an idea of where the different ones are. I'm based out of the southwest at the moment. Next slide, please. How did we get to the situation we're in now? Well, if you go on to the next slide, please. The main thing that started the market as is China's recovery from Asian swine fever. The fact being that they were back in 2020 to 2021, they started building the biggest pig units ever to be seen, as we see at that first picture on the left, how big it actually was. And they breed their pigs to such sizes, they're bigger than polar bears. If you go on to the next slide, please. And you can see how the imported volume of grains that China themselves have imported for 2021, how much of a bigger jump that has been, 33 million tonnes more in one season. That's had quite a massive impact on the world supply. Yes, with China, you never know how much is true, how much is actually in the stocks, because it all varies slightly, but you can see itself how much of a bigger jump it is from when the swine fever and the recovery from that. Next slide, please. The other thing that made quite a big difference for us was how the weather, we needed good weather to comprehend for a lot of this. We had heavy rain in the EU, in the northwest. There was heat waves in Canada. There was rain damaging the Canadian rails, flooding in East Australia, heat waves in Russia, and frost in Brazil. So the weather really didn't help us increase the world stocks. Next slide, please. This one just gives a little bit of an idea on Russia and the invading Ukraine and how much of the world products they actually export. Russia and Ukraine, between the two of them, export 37% of the world exportable surplus. It's quite some mad, large figures that when they take themselves out, why the market jumped so much because of the war. Next slide, please. So there was quite a few different things at the end of 2022 to 2020 to 2021 that had quite a big effect and created the perfect storm. You had China that, their stocks levels were a lot lower, so they were beginning to see the bottom of their silos. There was crop failures across the world. There was different biofuels policies brought in and starting to be looked at and wanting to increase that in huge amounts. There was logistical constraints, trade restrictions, and then the war. So there were so many things that just have created the perfect storm. So hopefully that just sort of goes over a little bit what Anthony said and the same sort of things, so we can see where the market has sort of gone. We go on to the next slide, please. Looking at more local, more closer to home, more at the UK. If you go on to the next slide, please. The UK typically produces a wheat crop of 14 to 15 million. We're expecting 15 million this year, is what they've been produced and what my traders and analysts have come out with the figures. The UK mills consume 6 million tonnes. 5 of that is domestically and 50% of that is generally Group 1s. 1 million they generally import from either Canada, the EU or the US. Normally about 40% comes from Canada first of all, of that 1 million tonnes. As the UK, we have an exportable surplus, but it all depends on ethanol production. And we're expecting 500,000 to 1 million to be used in ethanol this year. Barley, an average barley crop is between 7 and 8 million. The maltsters consume 2 million. The most recent figures I've had out this year is they're looking at 1.8 million tonnes that they're going to be using, which gives us an exportable surplus of a general year to year of about 1 million tonnes, depending on what our quality is whether that's malting barley or whether that's feed barley or a combination of the two. This year, there has definitely been more malting barley being exported than feed. Next slide, please. The UK harvest, generally it was a very early, dry and cheaper harvest for farmers. There's been no drying charges, which has been a nice change, or very few. The only exceptions to that is the Northwest and across Yorkshire, which they started a little bit later, but still it was still dry and not too many issues. It's resulted in very high bushel weights across all grains, especially oats, which has been quite phenomenal. The only issues we've had is with regards to milling wheats. A lot of them, instead of being the 13% of the mills in the UK like, it's been coming in between 11.5 and 12.3. The mills have lowered their spec, so instead of it having to be above 12.5, they are taking down to 12 with claims. But it's still, the amount that is in the UK is tight. Malting barley, much lower nitrogens than a general year. There has been some EU maltsters that don't want as low as what we have produced this year. So it has been a little bit of a chicken and egg with regards to marketing on that. But yields have been absolutely phenomenal in most areas above the 5-year average, apart from over in East Anglia. Forecast for the UK, my analysts say, is around 14.6 million tonnes. Sorry, strategic Danes say 14.6 million. My analysts believe it's slightly higher at 15.7. And the EU forecasted wheat crop, my analysts 140 and the strategic Danes 138. If we can go on to the next slide. With regards to marketing, it has changed quite a lot. I've been doing this job 7 or 8 years now. When I first started, it was very much a lot of farmers did the traditional marking, a third. Whereas now that has changed. A lot of people are having to think about your movement, making sure if you need harvest movement because you haven't got the storage facilities, you're getting on and you're getting it done, or if you have other uses for the barns to get the product gone as quick as that. Making more use of actually when you want to sell it throughout the year, so therefore you've got the money in the bank for cash flow. That is becoming bigger and bigger as we see all the costs of fertilizer, seed, chemicals, labour, machinery, etc., all get higher as time goes forward. There seems to be a need for much more focus on management of cash flow. This market is extremely volatile. We have 10, 15, 20 pound swings in a single day. When I first started, we were lucky if we saw that in a month. It has changed. The main thing to do is to manage your risk, cover your downside, make sure you're locking in a margin and sell little and often. It's very difficult to know which way he's going to do. We don't know what Putin's going to do, what politics are going to do and how it's going to come out in the future. If we can go on to the next slide, please. A little bit going over what Anthony said with regards to what else can happen in the future. Looking at Russia and Ukraine, the export corridor started on the 22nd of July and runs until the 19th of November. At that point, up until the 19th of November, there will be discussions before to see if they want to extend it. It is looking very unlikely as it stands at the moment. From yesterday, day before yesterday, from the 4th, earlier this week, Russian inspectors decreased the number of vessels they were to inspect by 50%, potentially reducing what comes out of Ukraine by 1 million tonnes. That is 50. They are saying they will only inspect 12 vessels per day, a maximum of 12 vessels per day, and that can cause a huge backlog as it comes out from there. We've then got what's going on with the annexing of the territories and the hostility and all the political games that are being done by Putin at the moment. Well stocks in China is another thing, is very unknown on what, as their stocks decline. We're almost 20 million tonnes down this year, and they've had a smaller corn crop than expected due to drought. If we go on to the next slide, please. The future UK bioethanol plants, Ensis and Vivergo, both are actually currently on a shutdown. Ensis have extended their shutdown by an extra 2 weeks due to repairs. They are both due to open up again, but at the moment they are shut, and that is causing a worry to how quickly they will open up again, or whether they will extend like they did last year, their closed period. A lot of the local consumers are buying hand to mouth. They're not buying forward. They are only buying little and often as they see it, because the prices are so much higher, and they're concerned about the recession, interest rate, exchange rates, costs, politics, COVID. There's so many different things that are going on at the moment. The only thing we know for sure is the volatility is here to stay. There's so many different things going on. All we've got is an extremely volatile market. Next slide, please. And that's me. I think I rally through them quite quickly, and hopefully any questions, and I'll be able to help.
Thanks, Pam. You've been very well behaved on time. There are various questions mounting up, which I will say the majority. And also, some of you have found the question thing for putting in your notes and basis points. So don't forget, if you want to do that, that function is there. Pam, just a very general question, sort of gut feel answer. But in terms of the phone ringing on your desk for harvest 22, a farmer's sort of slower than holding back, or about the same as it in other years, or ahead of the game in terms of how quickly they're marketing the crop?
I think it completely depends on the farmer, and I think a lot of them have sold forward early when the prices were a lot higher back in May, and when we were over the £300. A lot of people took advantage of that, and instead of the long holders holding on till May, June time, they sold it in November. So the phone was ringing early on when it was all high. It has slowed down a bit now, but a lot of people are still tickling it out little and often. And I'm meaning, instead of doing 8 or 9 ton contracts, they're doing 3 or 4. So they're actually ringing in more regularly and doing a little nibble here and there. Just, okay, I'm making a profit at that price, I'll do a couple more loads. And if the market goes one way or the other, I know I've made a profit. But still keeping the toe in the market to be able to keep going.
Yeah. Okay. Well, we'll come back to that strategy. Okay. We'll keep cracking, because I'm watching it a lot. Delighted now to welcome from Australia, Bruce. Bruce and I first met back in 2011. We were both on a Worshipful Company of Farmers course together, which was a great course, and we've kept in touch since. And I thought it'd be really good to get a different perspective of a different part of the world, and a different marketing strategy and mindset and everything else, probably. Well, maybe it's not, time will tell. But Bruce is just going to share a little bit about it himself and his farming, and then how he approaches his grain marketing strategy. So Bruce, without further ado, we'll hand over to you. And there you are. We're all seeing the slides right. It's work. Thank you.
Too easy. Thank you very much, Philip, for the opportunity. Yeah, it's early morning, as Philip said, early morning over here in Australia, and some of the early comments about rain. Yes, we are in our 3rd year of La Nina here now. We've currently had 20 mils overnight, and yeah, we're getting ready for potentially another flood here. They're talking 50 to 60 mils of rain over the weekend, which will nearly tip us up to another 100 mils for the month, which is yeah, very, very wet. Anyway, as I said, thank you very much for the opportunity. So we're farming at a place called Parkes, which is in central west New South Wales, about 4 hours west of Sydney. Yeah. Anyway, our farm, approximately 4,200 hectares, 0 tillage. So what I mean by 0 tillage is we're all disc planting. We're not using knife points. We vacuum plant or precision seed a lot of our crops, all of our grain legumes. So crops like chickpeas, lupins, our oilseed rape or canola, we actually precision plant all of that. Then our summer crops, sorghum, mung beans, they're also done with precision planting. What I've got there called 12-metre controlled traffic farming. So by that I mean we're on a 12-metre wide planter platform, harvesting platform, and controlled traffic farming is where all of our wheels are matching a similar path line. But we do cultivate country if required. And look, this just gives a brief summary of the crops we're growing, and we farm about 5 properties about 20 kilometres apart. The one thing I want to touch on briefly with regards to risk is the rainfall volatility we experience, particularly in my part of the world. So you might have seen some pictures of a couple of years ago when Australia was in the depths of the drought. We had bushfires, big dust storms, etc. Our annual rainfall for the year in those sort of years is around that 200 to 250 millimetres, of which we can't really grow much at all. At the moment, we're trading around decile 9, decile 10 rainfall, which means that we're now up around that 800 millimetres, and current to date is we're just under 700. I wouldn't be surprised if we hit a metre this year, which is something we did in 2010. So we have pretty extreme rainfall volatility, and with that brings pretty extreme production as well. So poorest year we've done on the farm was 2006. We grew 500 tonne for the calendar year. The previous year, which has been the best year we've done on the farm, we'll probably harvest around just under 20,000 tonne of grain. So pretty significant swings in terms of grain production. And with that comes obviously risk and how we manage that risk. But one of the big risks we have in our business is frost, what we call spring radiation frost, which is where you'll get frost conditions when the wheat is flowering or the grain or the cereals are flowering, and then what we obviously wet harvest. So what drove us into summer cropping was the last really wet year we had of 2010, where we had a frost come in September when the crop was flowering. Wheat crop that should have done 5 tonne to the hectare did about 1 tonne to the hectare. And then in our harvest period, which is normally November, December, we had heaps and heaps of rain. So this was the year just before I came to the Worshipful Company of Farmers course. We were still trying to finish harvest in late January before I actually came to meet Philip for the first time. And we'd had 16 inches of rain in December and January when our average annual rainfall is only 20 inches. So we were just loading up on risk, and we just thought, why are we loading up our business on risks at key times, be it trying to plant winter crops in April, or looking at what the climatic conditions are going to be when we're hitting grain fill, and then also harvesting our winter crops. And we just thought, is there a different way we could do this? So we decided to look at summer crop, which in our environment here, so when I'm talking about summer crop, I'm talking about sorghum, potentially dryland cotton down the track, mung beans. We have had a little dabble in corn or maize, but we probably don't really have the environment and the soils for it. So traditionally we'll plant our winter crops in April and harvest them in November, December. With summer crop, we're planting in late October through November, and then harvesting those crops in March, April. So we're basically trying to take a bit of a weather play. So one of the things we got into after that 2010 year was growing sorghum. It's now a key part of our rotation. Last year we had 1,200 hectares in, of which we'll harvest probably close to 7,000 tonne. This year, given how wet it has been, so in my part of the world, we're currently only 50% planted on our winter crop. We're going to carry a lot of that country through to summer crop if we can get the country to dry out enough to get it planted. I'm probably right on the southern edge of where we can potentially grow summer crop. We've been, without trying to talk myself up here, we've been sort of pioneers in this area and trying to grow grain, sorghum and mung beans. Doesn't work for us every year, but when we hit soil moisture triggers and when we also have climatic conditions in terms of forecasts like La Nina go with us, we can do it very successfully. The other one we've had to play with is mung beans. Not sure if you grow them in the UK or not, but basically they're a food crop that go into things like they sprout them. So if you've had Thais, the Thai food, the little sprouts you have on top, that's from mung beans, and they also go into cooking and processing for mainly subcontinental markets. And we grow these either short fallow behind sorghum, so we'll harvest the sorghum in March, April, fallow through till, where I say fallow, like keep the country bare through till say, pardon me, October, plant mung beans, harvest them in February, and then potentially come back with oilseed rape. Or if we get a really wet harvest in November, December, we can potentially come back with these as a January plant and then harvest in April. Why do we get into summer cropping? Well, it gives us some options from a chemistry point of view. So Group A is now Group 1, so your DIMs and FOPs, so we can help deal with some resistance issues we have in some weeds, rotations, etc., etc. In terms of grain storage, we've traditionally been going down the silo bag path. We find it's variable cost. It's easy to go out of the paddock, and we've done that successfully since 2004. However, bags, when you start growing lots of tonnes, become a lot harder to manage. So we're in the process of actually going to a permanent site. This is our early stage of where we are at the moment. So they're approximately 1,700 tonne silos. We're going to have half a dozen conical silos on the left-hand side running perpendicular to those flat bottoms. This will be approximately 10 to 11,000 tonne of fully sealed elevated storage. We'll have a grain pit, we'll have a garner bin. We've imported one of the Alvin Blanche dryers, which are made in the UK, because we're going to need that for, we've still got sorghum standing in the paddock for where we couldn't actually, because it got so wet so early, we couldn't actually get to it. So we just need that to cover off our risk. And what Pam was talking about before about selling little bits more often, that's going to be our strategy moving ahead. So we'll be able to blend with this, we'll be able to sell carry and be able to be a more active participant in the market in a passive sense, which is something I'll talk about a bit later. But this is going to be a really big step change for us. It's going to make our lives a lot easier. It's just, we've just got to chew through it at the moment, just given how wet it is to get this facility up and going. And potentially we might even be able to look at containerising our own grain down the track. We're 15 to 20 kilometres from what they call the inland rail, which will link Brisbane to Melbourne, and potentially be able to access boxing facility or access the railway for boxing facilities, potentially be able to send our grain direct to port. Because as you would appreciate, I'm not sure what it's like over there, but supply chains here in Australia are absolutely woeful. In terms of, Phil wanted me to talk a bit about what we do from measuring soil water. So obviously, when I was talking before about that volatility and rainfall, that has a big impact on our production. And coming out of my Nuffield scholarship, which I did in 09, we had a year in 07 where crops looked fantastic, and then they basically hit a wall and just went to pot. So coming out of that, we decided to look at subsoil moisture capacitance probes, which are used a lot in the irrigation industry. So we managed to get a little bit of funding through Landcare and Woolworths, and we put a network of these probes in. And basically what they are is they're a tool for us to measure soil water in our soil moisture profile at any one time for decision making. So this is what we did. In terms of what we use them for, being able to assess where our soil moisture profile is, it helps us particularly with planting decisions, because once you commit to a planting decision, you're locking yourself into a lot of costs now. Farming is becoming a very expensive business to run. It obviously helps too with in-crop nutrition, so looking at our nitrogen management, how much water do we have left in our soil moisture bucket, and do we want to keep feeding that crop based on how much water we have left available and the seasonal outlook, and then hedging grain. If we look like we're coming into spring and we don't have a lot of soil moisture left in our soil moisture profile, we'll probably back off from being a participant in terms of forward selling. So for us, it's about trying to inform ourselves more around what our soil moisture is and trying to use that to assess risk better in our business. So this is what they basically look like. So it's a series of moisture levels. That probe has about I think they're a sensor every 20 centimetres, and we use that to build a graph of how much water we have. So this is a slightly older one, but basically we're using it to approximate what we call field capacity. So that is where down to 1.8 metres, the soil cannot hold any more water. And then the red down the bottom is permanent wilting point, where basically we have exhausted that soil moisture profile. So in real time, we can see where we sit during the year and in terms of where we are for fallow management and also crop use. So you can see there where basically the graph falls off a cliff. That's coming into spring when the crop's going reproductive and it's using a lot of water. And the little blue lines along the bottom are rainfall events and where we hit recharge. The other interesting thing too is when you line these graphs up over a number of years, you can start to see that where you thought field capacity might have been or where permanent wilting point might have been isn't actually the case, because different crops will extract water to different levels. So here, again, talking about that 2010 year, you can see where we thought field capacity was at 18 for argument's sake, but when we had a wet summer and we recharge, or sorry, wet late summer, or sorry, late spring, early summer, you can see how we've actually got a bigger bucket to store water than what we thought. So when you have these tools in place and you can assess it over a number of years, it actually becomes quite powerful. So this is what we found with respect to probes. Probably one of the key things is storm rain. So the old joke that your neighbour might have got more rain than you, well, sometimes that does happen. We've seen massive variability around summer storms and even just rainfall events that are cold fronts coming through. You do see a massive amount of rainfall variability across a small area. And as I've mentioned down the bottom there, they're more reliable than what we use, like a handheld push probe, where you push a probe into the soil to see how much water you've got. So again, for us, it's really about trying to figure out what is the right crop to grow for that moisture profile, given market signals, crop rotation, etc., and how we use that to make better decisions. So my Nuffield Scholarship, want to talk, this is the grain marketing forum, so I just want to talk briefly about grain marketing. So coming out of that 06-07 period when we had crop failures, we were also a participant in forward marketing, and we got burnt quite badly, to be brutally honest. We had to write out a large cheque for hedging losses that year, and that's what drove my Nuffield Scholarship in 2009. So a couple of things I just want to talk about is looking at average pricing. So again, Pam talked about selling little bits more often, but that's probably the approach we're really trying to take in our business now, particularly around our key larger commodities of wheat, canola, oilseed rape, grain, sorghum, is trying to be a participant over a wider time period. So what this chart here is basically talking about is how the old highs become the new lows, and it hasn't been updated. I apologise. I've had to pull this out of my old report, but basically you can see how, looking at grain markets, how the old highs become the new lows. So, yeah, become the new lows in terms of support. To touch briefly again, one of the main reasons I like this sort of more passive approach is because of the unforeseen events, and we've certainly witnessed that this past year. Again, I'll talk our own situation here. We're probably a bit like in the UK. We had really strong canola prices leading into our harvest, so October, November last year, and then they basically fell off a cliff. And we thought, we thought, well, we'll just sit back and see what happens, and we'll just keep dribbling a bit out. And then obviously the Ukraine situations happened, and we were then selling that canola for $1,000 a tonne Aussie, which is about 570, 600 quid. So we managed to pick up a couple of $100 a tonne just by, again, taking an averaging approach, not selling it all on in one particular time frame. And if you haven't read The Black Swan by Nassim Taleb, it's a book I'd really recommend you read. It's got some great strategies in terms of risk and how you manage risk. One of the other key things I found on my Nuffield Scholarship was when I was in Iowa in the United States. I met this gentleman called Ben Renschke, very large, successful corn farmer, and his approach to grain marketing was to sell a bit. He'd break it down into increments, sell it over 2 years, over 40 weeks. He'd basically take out 6 weeks of harvest pressure, 4 weeks either side of the end of the financial year when you had a lot of people selling for tax reasons, and a couple of weeks, and I think it was in March, because that's when all the John Deere repayments were on machinery were due. So you had some weak sellers then, and he would aim to basically just take average, and he'd spend his time either with his family or working on his business, trying to make his business better rather than stressing about grain marketing. A question I'll put to you is, should we not accept market average? Should we consider a passive style approach to grain marketing for a portion of our crop? Instead of stressing about it, I don't know about many of the people in the audience, but in my scenario, the skills that I would like to think make us reasonably successful farmers aren't transferable to commodity speculation. And again, why the worry? Again, you guys can read this in the interest of time, but yes, price is important, but it is very, very hard to get it right, to time it right. So again, I would suggest to you guys, why not dare to be average? Anyway, we'll wrap it up there. So thank you very much for your time. I'll pass this back to Alistair, and yeah, look forward to any questions. And again, thank you very much for the opportunity.
Bruce, great, thanks. That's a great insight into how you approach things, and I remain fascinated by your planning based on the initial moisture. Just a question for me, really, but is that still holding true now? That the weather volatility is getting perhaps more than it was 10, 15 years ago. Do you still use that?
Yeah, so 18 and 19 was the driest I've ever seen in my farming career. So at the start of 2020, when everything was really hitting the wall, we either had dust storms coming in from the west, or we'd have the smoke from the fires at the coast being blown in from the east. It was incredible. And now basically we've turned that around. Again, I joke about Australia about being a desert surrounded by a beach, but it does rain here. As I say, the past 2 years have been the most successful in my farming career. This year's too wet, to be brutally honest. And Sydney is about to break its rainfall record going back to the 50s in terms of the highest amount of rain ever, which isn't very long really, but it's making a lot of press here. A lot of flooding in this New South Wales up into Queensland area. So yeah, the volatility is becoming, I'd argue, is becoming more. And we've got to try and build a farming business and a farming system to try and deal with that, which is partly why we've gone down this summer cropping path as well, because I don't know what it's like in the UK, but here there's always something out to get you. If it isn't frost, it's hail, it's drought, it's flood, it's mice, it's grasshoppers, there's always disease, there's always something out to get you. So we've got to try and build a system that can help deal with the volatility and hopefully capture moisture and help us turn it into profit.
Cool. Thank you, Bruce. We'll come back to you. Great. We'll move on to Bob for a different perspective from Southern England. Bob, you've not dissimilar area in some respects, but maybe a different approach. Share your farming story and how you go about it.
Hi, good evening, everyone. Yeah, my name's Bob Rowe. I farm in East Dorset, where we sort of have a very thin soil type, chalk flints and infertility, we call it. But anyway, we're very lucky that through some of the changes and methods that we've adopted, that our yields are pretty good, I must admit. So we're farming 1,700 hectares here, and very mixed cropping, all the normal things that you're probably doing at home. We are growing peas again, and I'm just looking at going into a better quality peas with Robin Appels on a contract with them. And it's interesting, 2 years ago, obviously where we're doing contract farming and marketing, some of my clients don't have grain storage, and the reliance on quick turnaround has been absolutely crucial. Well, we took the decision that actually, do you know, it'd be better not to have Fendt tractors and high fixed costs, and take a real strategical look at the business to see that could we do something from refinancing from what we'd already got by actually putting in more grain storage. And over the last 5 years, I've basically doubled our grain storage, and we are hopefully going to be looking to put yet another 1,000 tons. So here at Manor Farm, we should be around 8,500 tons. We've got a continuous flow dryer. My other clients, we've only got 1,000 tons at one farm and 1,200 at another, and we're dealing roughly with around 14,000 tons. So it's just my gut feel that you know, movement is a problem. Price penalties are a problem at harvest, and you know, I want to be in control of the game really, and I feel that we've lost that flexibility, even though that we're 25 miles from a deep water port. The exports are just not happening like they used to. So I can quite happily remember 30 years ago when we would have probably 20 lorries come in a day because we were loading grain to go out through Conti's for export. hardly any of our grain in those days was actually consumed in the UK at all. Everything was going for export. Where now, I would say all our wheat goes west, hardly any goes for export at all. And it's a different market to what we were when. Fast turnarounds don't happen. And so it's my strategy, right or wrong, to go to the maximum amount of centralised storage I can. The other thing too, obviously, that we've got the issue with Red Tractor, the quality of storage, the whole reliance on that side of the business and keeping up with it is a big factor to me, and getting it right. And going forward, it's an integral part for our exports. It's like the amount of malting barley we do. We're very fortunate that obviously through Frontier we're able to export through Southampton, and most of all our barley will be going abroad this year. Where in the past sometimes we'd be going up to Monkton's with Robin Pales. We do an awful lot with Cefetra as well, but I've got basically my two main people I deal with this Frontier and Cefetra. It's reliability. It's all about knowing you're going to get paid. It's the relationships that you build up with your dealers. You know that you're going to be looked after, and you know, we may not get the highest price on the day, but we do know that we're going to get it moved. We do know the paperwork's going to be right. We do know that there isn't going to be an issue at the end of it. And my view is that actually, when I talk to my clients, it actually starts, the marketing starts with the budget for the next coming year. So I've got a lovely family that is one of our clients, and we sat around the table back in May, and they made the decision, quite rightly too, and obviously I guide them as much as I can, that, you know, we sold half the harvest back in May, going forward for 2023. Now, I think that takes a lot of guts, and they took the trust in me as well, to go forward. And, you know, it's been absolutely the right thing to do. And we had a meeting the other day and we went through it, but, you know, they made the call. They thought the budget was right. And this is how I do it. I have to be honest. I'm not a great one for selling bits and bits and bits. I would prefer to actually say, you know, we've got a really good margin here. I know I can do well on that. We've got probably a track record that we know that we consistently can supply a tonnage. And I would go for more on the sort of, yeah, we'll do half of it. And we've been selling 2023 for some months now. And like even sold some more this week again, because I think it's right to. We do grow some feed barley, which does have to move. We can't store it. And I think if you can see a sensible price there, you take it. And on this thing about movement again. But if there was some way that I could actually hold my grain and play with it more, I think in that selling early forward and knowing where we're getting to, I think that would be good. So this year too, for the first time in many years, we've actually put some oilseed rape into store. One of my clients was very keen that we shouldn't just take the market price. Well, obviously, we're at a situation where minus £40 at the moment, somewhere we sold a lot of my other clients decided to sell right out, but they could be right, yeah. And we did this deal with Pam, and she's looking after it for us. So, you know, so contact and tools that I use, right, for doing my marketing. I think the AHDB website on the futures prices is really good. But one thing I do, and people may think I'm a bit daft doing it, but I do look at the currencies. I would probably look at that twice a day, if not 3 times a day on the phone. I can always tell you what the oil price is. I can tell you what the gas price is. And through that sort of combination and watching those sorts of things, you know, they never ring the bell at the top, do they? But I just like to, that's my sort of barometer and what I feel is going on. And obviously the contacts we have and the information that comes through it's so much better than it used to be. The text that we get from Open Fields, the daily updates we get from Frontier, Pam sending us her newsletter, all these types of things. And of course, obviously, if you really want independent, you can go AHDB if you really want to as well. So we mustn't discount that with all the information that they're producing. As part of my sins, I've been involved with the NFU on the cereals board for many, many years. And, you know, we get fantastic market updates from there. So it's all this sort of a bit and a bit and a bit. And, but I would say the main thing is that I'm playing to the market that I know I can supply locally, that we don't kill everything by transport. And I think this is one of our best ways that we can maintain a margin. Do your budget, see where you need to be. If you got that feeling it's going to be right, for goodness sake, take it. And, you know, we were very fortunate last season that we did hit some of these old wheat, you know, phenomenal £300 prices. And we sold some awfully badly. So our friend from Australia, when he says talk about an average, you know, last year, my gosh, it didn't come out well at that. So, but if you can see, you know, like, and selling strategy, it's like we've got to pay for all our nitrogen in November. We've never paid for nitrogen in November. You know, I remember starting, it always used to be, actually, do you know, with liquid, we used to be paying next June. Then it's gone back to January now suddenly. But well, I must say we've got nitrogen on the farm, so that's crucial. And we bought it in that 3-hour period that was available. So we've got that underwritten. We've got the grain price underwritten, and hopefully if the weather plays ball. And just for interest, we're at 441 mils of rain so far this year. Our 38-year rolling average is 930. So we've got a devil a long way to go yet. So please, if there's any questions, and I hope that just gives you a snapshot of where we are. One thing I would say that if you want to see pictures and what we're doing, I've actually got an Instagram page, so I'm on the gram, and it's just literally Bob Rowe 6177, and I'll shut up. Thanks so much.
Thank you, Bob. Thank you. That's really good. Leave your microphone on, Bob. As an ex-banker, it's music to my ears to hear you talk about budgeting. So you tick the box there, Bob. But you talk about doing some marketing from your budgets. What if your rolling average is 10 tonne a hectare? What's the sort of top end of selling that you'd head to as a percentage of that rolling average?
Oh, we go 70%.
Right.
Yeah.
Yeah, and I guess that's going to be
80%.
Yeah. Everybody's got
the only I haven't got into a problem yet on that. The only thing I really got worried about, I think, was about 6 years ago when the spring barley situation, I actually did sell some contracts back to Frontier. I must admit, I think I might have oversold, and as it worked out, another friend of mine I know who farms up in the Hungerford Way, he did the same thing. And because we really did think we might catch a cold in that horrendous time in April when we were still drilling. And I did bite the bullet, and it did cost me a bit, but actually there was no need to in the end. So I did get that wrong.
Thanks, Bob. If the others would just like to come back in, we've got some questions here. Just to remind you, if you have to pop them into that question box. And for the gentleman that was asking, that's the place also to put in your basis and roso details. And if you didn't do it when you registered for the webinar, we can add them to the list and get you registered for those points. So in no particular order, I'll start working through a few questions, and please don't hold back, folks, if you want to question each other and quiz each other, because we've had some interesting similarities and some differences as well, I think, between our different speakers. So perhaps some discussion points there. Anthony, I think AHDB are doing some work. I don't think there are any results yet, but there's a question here about whether we think the price of nitrogen is going to reduce UK production. Am I right in thinking that work is still in progress, or have we got anything back from it yet?
I believe it's in progress.
Yeah.
What was the question? Sorry, price is going
Well,
to.
is the higher price of nitrogen likely to curb, and I guess
Yeah.
hence supply, hence application rates? Will that
Oh no,
production
we do have
harvest?
some stuff on that. I haven't explicitly been involved in that, but there is some stuff on that on how it could impact margins for 23, which I can put a link to disperse on the chat.
Can I make a plea?
Yeah.
Being an NIAB tag member and having an NIAB tag trial site on the farm, which part of the fertilizer nitrogen work has been going on this, and fantastic work that they're producing and the results that have come through on reduced amounts of nitrogen. But I have to agree that honestly and truly, it's not just, I think it's a knock on to the following crops we're going to find. May not be this year, but I think in 2 or 3 years' time, that reserve, it's like people that go transfer to organic farming. Their yields stay up, don't they, pretty well in that first 1, 2, 3 years. And then suddenly it starts to fall off. And I think we could experience the same sort of thing with the reductions in nitrogen.
I guess it's a question of Bruce and Bob together, because you both invested in storage, and Bruce, you're in the process. But what sort of period of payback are you looking to on that investment? I mean, is this a 10-year program, 20-year program?
Oh.
Okay, I'll kick off. Look, for us, this is a generational investment for us, and it's probably stage 1 of where we'll probably end up. We can potentially make this a 40,000 tonne site if we want to go fully commercial. We've got redundancy in there in terms of area and the planning we've done. In terms of payback, I'm anticipating 10 years, but if you can tell me what my production's going to be over the next 10 years, I'll be able to firm that up for you. But it's we're just we've hit a point where doing silo bags just isn't sustainable given the risk we're taking with trying to outload and the time that's taking. We also are growing a lot of commodities that are what we call non-deliverables. So a bit like how you go to your stores, things like sorghum, all of our grain legume crops, triticale, we have to store that stuff on the farm and market it. So for us, if we want to continue growing those crops and the farming systems benefits that they bring to our farm, we need to invest in storage to be able to outturn that during the year. The other thing too I'd touch on is just, particularly this year, it's really driven home to me with the amount of wet we've had. If you've got the ability to outturn when the market wants it, it's worth a lot of money to you, either from a buyer giving you a few more dollars than what the rest of the market will because you can guarantee it, or if they've got trucks or lorries they need to keep moving, you're in a very strong position to be able to extract some more money from the market if you can provide that service. But Pam might have better comments from in terms of how, again, without stealing Bob's thunder, but she might have some comments there around what the trade are looking at from a point of view in terms of storage.
Can I just on my storage, obviously we're not going into silos, we're just in flat stores, very sensible sizes, because I'm afraid I look at it from 2 different ways. I'm very lucky I have a daughter that hopefully will be coming into the business, and so we're going flat stores that can be used for other things, and where we are, we have business units on the farm, and flat storage in our area rents very well. So if contract farming decides, and farming in the UK decides to have a moment, and we don't think that's, I think putting a roof up with power floated concrete floors with no air interruptions in them, as I call it, is always going to be a sensible thing. So, you know, we can get 350 square foot here for that sort of store. The payback is really good. So, you know, either way, it's got to be right to invest.
Pam, from your perspective, we've heard the benefits for Bruce and Bob of having on-farm storage, the flexibility that gives it. But does that help your cause as well as a grain buyer to achieve a better return for that grain?
Yes. The quick answer is yes straight away. If you can keep it on farm, you haven't got the harvest movement pressure, the logistical trying to get the grain moved into the right homes. If you can store it on farm, it's definitely worthwhile. I've got quite a lot of farmers now that will store on farm until October, November time, empty out the shed and then put in caravans or other machinery like that, and they're getting the double whammy. They're not getting the deduction of harvest movement, they're getting another income and diversifying in a different way.
Cool, thank you. Anthony, question here, which is probably one for you. EU grain exports are lagging season to date. Do we expect it to catch up?
Oh, good question. I would say, well, that ultimately depends on third country demand for grain, which I'd expect when the price comes down, demand to pick up. Obviously, it's been pretty lackluster with high prices. So I'd expect if we see the market, it depends what happens, as we've been saying, with volatility and high prices. If we see the market come down, I would have thought demand would pick up from third countries, yes.
And there's a supplementary here. Where does our UK exportable surplus of wheat go?
The UK, sorry?
Yeah.
Oh, it will mainly probably go to Ireland, the continent, and North African nations and nations around the Mediterranean Sea, usually. And usually we probably usually export feed wheat as well. Import, as Pam was saying, we import the milling stuff, the German A&E wheat and the Canadian wheat, all the high protein stuff to supplement our lower protein stuff for this year, and we export our feed to North African states and states around the Mediterranean.
Pam, is that a similar story from your perspective at Cefetra?
Yeah, I would agree with what he's just said. Yeah.
And sorry, I'm scrolling through here. I know this is a how long's a piece of string again, but are either you seeing any drastic movements as a result of the currency in the last week, or is it not, or other factors playing bigger on the market?
I'll tell you what, the sterling tanking is making probably us quite competitive to export out of the east coast at the moment. So yeah, it is having an impact. At the start of this week, global markets went down, but our market went up off the fact that sterling hit the floor. So yeah, it is impacting things, and it's making probably cash values for UK farm businesses who are exporting higher.
And the November 23 price, that's gone up nearly £6 today.
Yes, so yeah.
And however you try this, and the other thing I think is quite interesting too, that basically the gas price is halved since September, which has got to be right. Hopefully, if you take this sort of thing, that a therm of gas is basically £200 a tonne of nitrogen, I think it is. And so let's hope that we can sort of gas prices stabilising. But what's really annoyed the energy market is, isn't it, that they've reduced production on the oil, and the oil's just kept going up again in the last 3 or 4 days.
Yeah.
Which is much more, and of course with the weakness of the pound against the dollar, we're affected by that. And all our inputs, however you try, is dollar related, isn't it?
Yeah, I mean we're coming off. We can't help that we've got fossil fuels that are controlled by a cartel to some extent. So you can have OPEC who put production cuts, which put up crude oil prices, which feed into all farm businesses. But what I will say, we've come off a year of good margins. Farmers put in their lower price nitrogen and selling their grain at a really good price. And I think now it's just managing risk, as we've just said, your risk for appetite, and also selling at a profit. You say NOV 23 is quite supported at the moment. I go to a lot of monitor farm meetings up and down the country, and growers say, oh yeah, I can make it work at that, especially and with the nitrogen fertilizer prices at the moment, but they're not selling anything forward, which I find quite amazing. I'm not saying sell everything, but what about 15% if you know you can make a margin on it? So I think
absolutely,
yeah, this year is more than ever taking opportunity of the prices right now, but especially even for NOV 24. I know there's limited volumes being traded on NOV 24, but it's looking at around £250 a ton, 252 I think at the moment. If you can make it work at that price, when we get round to NOV 24, I know no one knows what this world's going to look like, and we don't know what's going to happen. But let's just say the most perfect thing happens, and this war in Russia and between Russia and Ukraine ends, and all of our energy prices come down. That £250 a ton might look pretty good, or it could become the norm. Who knows? But then, yeah, I think this goes back to managing that risk and selling at a profit at the right time.
Well, it is when you got wheat going off farm in November that we sold a year ago at only 150.
Yeah, yeah, I know. I literally
you see what I mean? So
yeah,
so you know, you're absolutely right. And Bruce in Australia about, you know, his getting a decent average. Like, we're going to have a wonderful average this year, but crikey, that 150, don't half pull it back.
Yeah, yeah. I guess so. If you sell forward now for NOV 23 at 270 or 273 or 5 or whatever it is at the moment, if that's the worst deal you've made all year, is that a bad deal? Bob, could you make that work now? 275?
Yeah, of course I can. Easy.
Even with these high fertilizer prices, could it still work?
Yeah.
Just out of
no doubt
interest,
about it.
Just out of interest, have you done any NOV 24 trading?
I've done a little bit, but it's very small amounts, and I'm talking instead the people that normally come through and will do 10 or 12 tons, 10 or 12 loads at a time are doing 2, and they're just seeing it as in it's a small nibble. If that's the worst I do, hey, hopefully the rest will be up. But if that's the best I do, I'm going to tell myself off for not doing more. But at least I've done something. And that is, I think, the marketing way. Anthony's pretty much said it, and so is Bob as well. It's, you know, it's all about knowing what your profit margin needs to be, what your base price is, what your costs are, and then taking in a contingency plan to if it gets worse, and then going above that and just nibbling it away.
I think too, Philip, it's a huge, as you know, what we've been doing here. It's a huge trust in faith in changing your system.
Yeah.
And trying to maintain yields in this direct drilling, minimal tillage, green cover crops, the whole thing that goes with it, no rain, establishment. You know, it's been quite an extraordinary season to actually change everything. And fortunately for us, the yields have managed to maintain pretty well. That it hasn't been the downside that you normally get when you change the system. I think we've been very fortunate. But, you know, there we are today. I was interesting on the internet today. There's a really good farmers saying, oh, well, I'm drilling at 12 litres a hectare. Well, we're actually drilling at 3.5 litres a hectare. And it's this carbon balance to, I'm sure Bruce is obviously all over this because with his system that he's doing, I expect he's make our 3.5 litres a hectare look silly. But we're trying, and we're changing our system to adapt going forward. And, you know, we never could imagine that we'd be selling wheat at 275. Just couldn't imagine that. That Pam bought some the other day at that price. You know, just X-Farm 275, and we were doing all this to try and reduce our costs back at you know, when we were at 150.
Bruce, do you want to come back? Do you have figures for your fuel usage?
Oh, yeah, we're playing. I'm trying to think now. Spraying's about probably 1/2 to 3/4 of a litre per hectare.
Yeah.
We're running a 36 metre boom spray. Planting, it'd be, yeah, probably wouldn't be too far off what you've mentioned there, Bob. Yeah, I don't run the planter. I let other people do that. I can't do everything. The other, The other thing, we're talking about grain storage too. I can just come back to that briefly, and I'm not sure if you see it in the UK, but we have seen extreme moves in basis here. So at the height of the drought, when it's very hard to import grain into Australia because of the phytosanitary reasons, our basis was equivalent of 160 pounds over Chicago.
Wow.
At harvest time last year, we basically went to the equivalent of 160 pounds under. So you're talking about 270 pounds a price, like your price. We've basically seen the price of that wheat move just in basis. So, and our supply chain here at the moment is absolutely rubbish. We have just got to take more control on farm and try and look at alternative supply chains, because we've had, like, in terms of port access, the three main rail lines that feed Port Kembla, which is south of Sydney, and it's our main export zone. We're about 500 k's from port. The three train lines there either had subsidence issues or collision issues, and basically there was 2 to 4 weeks there where any grain to go out of that port had to be trucked in. Like, we couldn't use the rail lines because of just the weather issues. So for our business here, we've really got to have a good look at our supply chain and ways to try and mitigate the risk and try and strip cost out, because for us, it's a really expensive part of our business. Not sure, again, how it sits in with the UK, but it's something we need to look at. The other thing that I'll touch on briefly, and was one of the main takeaways from when I did that Worshipful Company of Farmers course, is just the commercial opportunities you have in the UK that just aren't available to us. So if I had the ability to go and put caravans and sheds and commercial let and all this sort of stuff, it'd be phenomenal, but unfortunately we can't. So that's why we've gone to elevated fixed storage, because we can't put caravans in it. Those opportunities aren't available to us, unfortunately. So, but hopefully we can turn it too. With summer crop, we'll be able to turn that facility, and with some of my contacts with the trade, we might even do contract storage. So for us, it's going to be a throughput facility as well, which will hopefully help with the payback. Thank you.
Bruce, just one there. We've been talking here about marketing 2 harvests away. I don't know whether volatility is worse or better in Australia, or probably the same, but how many harvests ahead are you?
I am completely long. I have not sold a grain forward. I'm selling old crop, and I'll probably carry some old crop heading into new crop. The farmer on the East Coast is very lightly sold just with this La Nina weather event, because if we walk into a wet harvest and we see downgrades going from milling grade to feed grade, the spreads on that at the moment would be anywhere from probably 60 to 80 pounds, and the grower is not prepared to take that risk on at the moment, because you just get crucified at harvest. So talking to again, similar to what Pam was saying, talking to some of my farmer colleagues, they're very lightly sold heading into this harvest. My grain marketing advisor says that we can probably get about equivalent of 500 bucks a tonne Aussie now, so that'd be sort of about 270, 300 quid for harvest for next year, and I'm tempted to start looking at that a little bit. But we're not big wheat growers next year either. We'll be big sorghum growers coming into next year, just with the wet, and we'll potentially be big oilseed rape growers. For us, oilseed rape is our pillar crop. If we have the soil moisture and the crop rotation, and we can line up oilseed rape, that is the crop we grow, because that is our best gross margin. So, we've grown over the past 2 years. We've grown 8,000 tonne of oilseed rape. It's been phenomenal for our business. Just blowing everything else out of the water. Yeah.
So, tell me, Bruce, can you use?
We try and line our rotation up for.
Can you use neonics in Australia?
Yep.
There you go.
Yeah, we still do the EU sustainability stuff, but yes, we can still use neonicotinoids. Yeah. Which, when I was again reading about the issues the UK and the EU have moved with neonics, makes it very, very hard to still grow oilseed rape. But yeah, for us, it's been phenomenal. The yields we're getting, the hybrid vigor. Yeah.
We've gone from a net exporter to a net importer within 4 years because of it.
Coming out of my colleagues in WA, so.
I was trying to end this on a cheerful note, but neonics and oilseed rape probably isn't the best point to finish it.
Well, it depends if you're up in the north of the country and you can grow it really well. I'm sure they're having a great time.
Folks, time's pressing on, so I think we'll wrap it up there. You've been very psychic in your discussion because you've answered the questions I haven't asked you. You've actually answered them as you've gone along. So thank you for that. Yeah. So just finally, thank you, Bob, Bruce, Anthony, and Pam, very much indeed for joining me tonight. Hope listeners you've enjoyed the discussions. I've just got a few notices to crack on through to finish up with and to highlight one or two things from HDB. Just starting next month, we've got our 4 strategic farms across the country starting to produce their results. So there'll be webinars through November coming to you from across the country on those farms. In November as well, we've got our Delivering the Future. We have the Shape the Future vote earlier this year, and now that's been sort of condensed and consolidated into Future Action. And this meeting on the 10th now is all online. We're just sticking to online now, and you'll be welcome to join us on that and register and hear how the things in the future are going. The agronomists amongst you, or the new agronomists, should I say, we run a lunchtime to lunchtime sort of 2-day agronomist induction courses as usual, which is a great opportunity for new entrants into the trade to find out about us and the industry and the sort of wider remit of their role. So if you haven't already registered for that and you'd like to, please do so. And then a little bit later for the seasoned agronomists, there is the next one is in December on the 6th, Peterborough, if my memory serves me right, which is more of a sort of hardcore techie agronomy conference with the latest research and so on. Coming back to really what we've been discussing tonight, it'd be remiss of me not to talk about Farm Bench. We've talked about margins and cost of production. HDB has got its Farm Bench tool. We've got groups all around the country. You're very welcome to join us on those, where we get down to the nitty-gritty and looking at cost of production, not just for what's happened, but also using the tool to look forward, which, as we've heard tonight, is a critical thing in terms of making your marketing decisions. So please take that opportunity if you'd like to. And the contacts within HDB are here, Anthony and some of his other colleagues on our business and market teams. They're all there to help you, so please, these are all on the website as well, so I won't linger here, but please make use of the expertise. You paid your levy, so make use of the services that are there for you. And in my team, on the Knowledge Exchange team around the country, here we all are in each region. There's Monitor Farms, Strategic Farms, Farm Bench groups for benchmarking. Please do make use of us, contact us, and we'll point you in the right direction and help us get the most out of your levy for you and your businesses. And that, I think, nearly wraps it up for this evening, everybody. Thank you very much for joining us. Just to remind you that we have been recording, so if you've missed it or had to disappear, then well, obviously you won't be listening if you had to disappear, but the full recording will be available. We'll be really appreciative if you can spend 2 minutes afterwards to complete the survey, and that just gives a bit of a feedback to move it forward for future webinars and future years to keep improving this presentation. And we continue again next month, again moving to the CI half of the Southern Hemisphere, and my colleague Harry's going to be leading the webinar, bringing in some input from Argentina and talking about cultivations. That's on the 2nd of November. So I think that's everything. I will just make one last massive thank you to Christian, who you won't see or hear, which means it's been a totally successful evening from a technical point of view. But thank you, Christian. You're behind the scenes, pushing the buttons and making things happen. So appreciate that. So with all that, ladies and gentlemen, thank you very much for joining us tonight. Have a good evening, and I hope the rest of your autumn goes well, and look forward to joining you at future HDB events. Thank you and good night.